Hey everybody, welcome to today's show. We're going to talk about getting ready for the end of the year. Tax time's going to come up. Not to mention you got Thanksgiving, Christmas, all the family parties, work parties. Do you really think you have time to think about this kind of stuff?
It's a stressful time.
It is very stressful. But if you don't, guess what happens?
Ruh-roh.
Yep. After December 31, it's too late. If you wait too late to prepare for the end of the year, you could end up owing taxes and not even be ready for it.
So now is the time to start thinking about year end.
And that's what we're going to talk about today. I'm Karen. I'm a CPA, entrepreneur with big ideas, and I'm the mom.
I'm Katie. I'm a payroll specialist, business owner, and detail-oriented person that makes things happen. And I'm the daughter. Welcome to Cheers to Business. Before we get started in all the stressful details, I want to talk about what personally helps me stay relaxed through these stressful times, and that is
Wine
and cheese.
And cheese. Got to have cheese.
So Donkey Market has a wine and cheese club where every month, I think you have the details, but all I know is there's some fabulous cheese in front of me, and it's so delicious. So what are we working with today from Donkey Market?
Well, today's wine is going to be Tablas Creek Vineyard. That's the easy part. Then it says 2017 Padelin de Tableau.
Please tell me that Brooke is the owner of Donkey Market. Did she tell you how to pronounce this stuff?
I asked her, and she said, I listened to your podcast, and I'm not going to tell you. So I think she wants to. I think she's setting me up.
I bet she has bets on how bad you butcher it.
She does.
Us Southern folks don't know fancy wine.
It's not Tableau.
All right. Anyways. Check out their wine and cheese club. It's on their Facebook page, Donkey Market. That's DOMKE.
Say the name of the cheese.
Can I finish promoting their business? Because I love them so much.
Say Rosie Goat.
Rosie Goat. All right. Anyways, let's get back to business.
Okay. Cheers.
Cheers. Karen.
Yes.
Mom.
Yes.
Mother.
Aw. Don't call me mother.
I am a new business owner.
It's like mommy dears.
Stop. Focus. I am a new business owner.
Yes.
Year end. Oftentimes, and I know year end in all things business, it's more than just the tax return in March or April, depending on your entity.
Yep. The tax return's after the fact. There's nothing you can do. Your year has ended.
So really, now is the time that I need to be concentrating on what?
How has your business done? If you don't know where you are, how do you know how to get to where you want to be? So you got to know where you are.
And how can someone find out where they are?
Well, there's all kind of accounting packages out there. You know, whether you use Xero or Sage or QuickBooks, there's so many different programs, and there's so many different ways to learn how to use those programs to help you. And now everything syncs with these programs. You can sync your credit card, you sync your bank, so you're not literally entering hardly anything. And so then you just push a button to get a report to see what kind of year you've had.
So the information syncs from your bank account to this accounting software, and then that you're just ready to rock and roll from that?
Yeah, I mean, you have to tell it where to put it. You know, it's smart enough. It learns the way you do transactions. So, for example, Office Depot, it probably puts it there itself now, but in the beginning, you might have to say office supplies. You know, you have something weird or wonky, you probably have to tell it where to put it. Well, QuickBooks got real smart, and they added an account. We always say back in the day, I used to always tell clients to put things, if you don't know where to put it to miscellaneous. If I see anything in miscellaneous, I know you didn't know what to do with it, and I'm okay with that.
And you put it where it needs to go.
Let me put it where it needs to go. But now QuickBooks came out with a few years ago, Ask My Accountant. Now, I get a little irritated in my office when my people put something to Ask My Accountant.
Because they are
the accountants. You can't put anything there. And so they go, well, I didn't know what to do with it. Okay, I get that. But that's what it's there for. And so if you don't know, put it there.
So what's the benefit? Because QuickBooks costs money, and you've got your desktop and your online. So desktop, you purchase that software, and then online, it's a monthly subscription. So I know a lot of people, when they first start, they're either just manually keeping up with their receipts, or they've got an Excel spreadsheet. So I guess what's the benefit of using QuickBooks versus an Excel spreadsheet?
A lot of it depends on what they're used to working with. You know, some of them don't feel comfortable using it. Now, the worst case scenarios and the people that always come in a little bit later are the ones that they had some on their business card, they had some on their personal credit card, they had some out of their personal checking account, some of it came out to cash out of their pocket, and they may have a little bit out of their business checking account. So that's the dreaded, I might as well get teeth pulled weekend of laying out all these receipts and putting themselves through pure hell, trying to come up with numbers. And then if they owe a bunch of tax, they go, oh, that can't be right. And then they got to rework it all again or pay their accountant more. Whereas if you just do everything out of your business checking account or one business credit card account, make it simple. You get this program, you sync it. Those transactions feed in every time. You put it where it needs to be. It will total up your office supplies. It'll total up your cell phone.
So, and I think to justify that cost, because when you first start, you're watching every penny. I think the time that you're spending manually entering stuff in Excel, that time alone would pay for the cost of QuickBooks.
Yeah, and mess up one formula in Excel and see if you don't lose out on some deductions.
Right.
That is huge. I've seen that.
And the historical data, I mean, I use QuickBooks not only for my business, but I have a personal account, but that's just because I'm super OCD. But it's so great to look back, 3 years ago when the business started. Okay, here was our growth that year. Not only financials, but, I can look at weekly revenue and just see the different trends. And
it's indicators too. If your office supplies is up $5,000, but your income's about the same, what is going on? Or how about your credit card discounts? If people are paying you by credit card, how do you not know that the credit card processing company didn't jump your percentage up? Well, you can tell it. I won't look at a financial statement without comparative to the prior year. In a tax return, every single one is, you look at the 2-year comparison. People do not reinvent the wheel. They just don't. So if anything's jacked up, that's probably going to be the first place you see it. But we're talking about getting the year end.
So getting ready for year end. So really having your data together. So we're in November right now. So January through, today's date or October, getting that data ready and looking what's happened within that data.
Right. Now, a good way to do that, if you have a nice and consistent business, you rock along, you're not seasonal for Christmas or, the heat, AC people or something like that. But take the last 10 months, I'm sorry. 10
Big
minutes.
Difference. Well, may take you 10 minutes, but it's going to take me 10 months.
Let me scroll back. One reason it's to justify paying for the software, you pay your accountant less. It's easier for us to prepare when you've got your stuff right.
Okay, so I'm gonna fast forward. We'll go back and then fast forward. Okay. So everything's in QuickBooks or whatever accounting software they choose.
Right.
What reports really are they looking at, or are you looking at, or that they can look at?
Then what I was fixing to say a minute ago before I scrolled back to the past was, if you take your...
My brain is... I can't take zigzags.
I know, but just listen. You take your profit and loss, okay? Reports, company and financial, profit and loss. That's all the QuickBooks.
We love QuickBooks, so we're going to reference that a lot.
We do. I started out in Peachtree DOS back in 1990, a long time ago. But the QuickBooks now is so easy on your profit and loss. For example, you run it January through October 31st. If your business is consistent, divide by 10 times 12. That's probably what you're going to make this year.
Divide by 10 to get the average monthly, then multiply 12 to get your annual.
Right. Well, let's say you're not through with October, but you want to know. Take the first 9 months, divide by 9 times 12. Get an average. What you'll keep getting then is after expenses, on an average, what do you make every month? Because people say, well, I'm going to have expenses. Well, you had expenses in the past. So if you average the net, you got a more consistent look at it. Now, what if you're seasonal? For example, well, my Christmas is coming up. I'm going to blow it out of the water. Well, all right. Well, let's go back to a comparative, profit and loss. Run it for December last year and December the year before that. What did you make? All right. Now, hang with me for just a second. Now do the profit and loss January through October. Divide by 10 times 11 and add December that you've done in the past. I bet you good, hard-earned money that you're going to nail it pretty close to what you think the year is going to come out to be. And then that's what we use to project out if you're an S Corp, what kind of W-2 you've got, how much taxes do you have paid in. And that's why we can nail down pretty close what we think you're going to owe for the year.
So all of that analysis prior to December 31st.
It's too late. If you're cash basis, and I'm going to bring me back to that in just a second. It's really, really important. If you're cash basis, that means your business, whatever goes in and out the checking account, that's what you get to count for your taxes. That check's got to be written, and it's any money in the bank. Doesn't matter what people owe you.
Okay.
Okay. If that's the case, after December 31, you can't do anything to change it.
No backdating checks.
No, you can't tell people to do that.
I'm triggering questions. I'm not doing that.
Well, they say you're not supposed to do that.
Okay.
Yeah, that's a no-no.
Accrual.
Here's another big thing. See how much fun this is? If you get audited, they're not going to pull 12 months bank statements because they on to everybody. They're going to pull 14. They're going to pull December the year before, the year you're audited, and January the year after the one you're getting audited. So what they're looking for is what deposits went in your bank that you collected in the prior year and waited because the mailman forgot to bring them. They got lost in the drawer.
I didn't have time to deposit them.
Well, it's Christmas holidays. I get that. And so, all this money goes in January. Well, then they're looking, okay, they're going to get your check register. And they're going to look and see what checks you recorded at the end of December. Well, they're getting that next January's bank statement to see when those checks cleared the bank. They're on to it. So, that's why you got to start a little bit earlier and really see where you're at. What if you don't have to do all this? What if you're okay tax-wise? You got enough paid in, you're comfortable, you want to show growth, because where do you want to be in 5 years? You want to sell your business in 5 years. Well, you got to have some equity and you got to show some income. Nobody wants to buy a losing business. So then get your income so you're growing consistently.
Well, I just want to touch on something. So I know, growing up, it seems like I was in your office every tax season listening to conversations. And a lot of time, if you had to call somebody and say that they owe, you always started the conversation off with kind of, congratulations.
You had a great year. You have a great problem.
Yeah. Mm-hmm. So I wanted to touch on that, as far as owing tax when your business has had a very profitable year. Right. But it seems like you're saying that if you're aware of that prior to 12/31, there's some things you can do to kind of alleviate that hurt maybe?
Yeah. If think about it right now. If you're not in a penalty situation, the government wants their money as you get it. Okay. So you're going to get penalized. And there's a formula that I'm not going to go into on this venue. If you're okay and not in a penalty situation and you're going to owe, think about it. You're good with how much income you're showing. You need a good financial statement to expand, or you want to buy a house or whatever you want to do. And you need your tax return to show so much income. All right. If you've got to do that and you're going to owe tax and you're going to have to suck it up and pay the tax in order to do all these other things in your life, you've got till April to save up. So where do you want to be? But you need to decide now. And today on this podcast, and hopefully people will keep listening in the future, but, today's November 14th. Next week's Thanksgiving. Who is going to get a whole lot done next week? Then you got football. Then you got the national championship, and then you got Christmas, and then you got And so
before we know it, it's March 15th.
And they go, "Oh my God, why didn't you tell me?" I go, "Why didn't you call me back?" I don't know what to tell people.
So another thing that I've kind of heard throughout the years is, in December, people talk a lot about, should I buy this truck or this equipment? And I feel like their brain is, should I get that money out of the business?
Okay. You want to hear my spiel on that one?
Let's go for it.
It's been 25 years. I pretty much got it down on right now. Why do you want to spend 30 to save 8? If you need that truck, if you need that piece of equipment, you're going to owe tax, then now is a fantastic time. In fact, the depreciation rules for writing that kind of stuff off is better now under the tax reform than it's ever been. Everybody hears about Section 179, which is, you can just write stuff off. Well, under the old law, you couldn't write off used equipment. Under the new law, you can.
Interesting.
Mm-hmm. There's a lot of new stuff. And so taking all that into consideration, because every CPA like myself, since this law has come out, has been gearing up on these new laws, and now we're working on them.
So speaking of spending money, that takes me back to something we didn't finish, which was we talked about what in reporting there's cash and accrual basis.
Right.
So we talked about the cash. So what is accrual for those people who don't know?
All right. You can.
In a nutshell.
Okay. Sorry. Cash or accrual. Under the old laws, basically, if you had a store and you kept inventory on the shelf, you had to be accrual. What accrual is it's about matching income with expenses. You don't write that stuff off on the shelf until you sell it. So you book inventory. If you book inventory, then you count what people owe you at the end of the year as income.
Interesting.
Why? Because you sold it during that period. Well, if I've got to pay tax on my accounts receivable, and that's what people owe you, then you get to write off your accounts payable. That's what you owe. So let's say I'm selling wine bottles. There's one in front of me. Tabla. So you're selling wine bottles and you buy 10 of them, but you haven't paid for them. So they're sitting on your shelf and you sell 8 of them. You still got 2 in inventory. You don't write those 2 off yet. Now the customer you sold those 8 that bought those, they haven't paid you yet. So you have right now on the books, you have a payable, an inventory. If you have a payable, you have a deduction for the cost of goods sold. The people owe you that bought it, that's accounts receivable, which means you have income. So the net effect of that with not a dollar going on is your bottom line. Cash basis. You got 0. They haven't paid you. You haven't collected it. You have no income. You haven't paid for it. You have no deductions. And people get confused a lot. You know, they say, well, so-and-so didn't pay me. I have bad debt. That little son of a bitch, he didn't pay me. Owed me $1,000. Well, think about it. You can write off bad debt under accrual because you're paying tax on what you haven't collected. So if you don't collect it, you get to deduct it. Cash basis, you never paid tax on that money, so therefore you can't deduct what you didn't get. It's hard to comprehend.
And this
I see your eye twitching.
I'm kind of. This is why I own a payroll business and not an accounting business. I took one accounting class and ran for the hills and switched to finance.
I don't want to be you. I screamed back at her. Nobody asked you to.
I do feel like it's important for businesses because a lot of times businesses
they need to know.
That's a door that they shut and they really don't want to open it. But it is important to know the basics of accounting, just to know. I feel like to know where your business is at.
They do, but it's the same thing as my car. I don't know how where that oil goes, but I know it needs oil.
But you know that a warning sign is a bad sign.
Yeah, anything screaming at me in my car.
But if you're not looking at that dash, you don't know if there's warning signs going off.
Exactly. The basics is your dash.
You don't necessarily need to understand your financial statements, but I think it isn't a good idea to keep them open in front of you occasionally. And that's why, me personally, I'm not an accountant. I have a finance major and years of payroll experience, but I at least know when I pull up my profit and loss, I look at this year compared to last year. And that's what helps me see the differences. Mm-hmm. So again, like you were saying, if it's up by $5,000, why?
Yeah, but because you can't rely on what you got in the bank.
No.
People think they can. They didn't call me back to do their tax planning, and it's in February or March, and I tell them they've got $60,000 in net income. That's wrong. You need to go back through. You're wrong. I said, all right, I've already kind of looked at this before I called you, but why do you think it's wrong? I don't have any money in the bank. All right, let me tell you where it went. You took it home, you paid off debt, or you bought a piece of equipment that we need to accelerate writing off to get the tax down. It's either sitting in your checking account, but it doesn't matter where that money is at the end of the year. It's about what you made during that year. What you decide to do with it, I don't care if you burn it. Don't put it in your mattress. Your house might catch on fire. But, I don't care what you do with it. But if you made it in that year, you're going to pay tax on it in that year.
Let's talk about spending money again with paying out bonuses to employees. Let's kind of pivot a little bit.
That kind of ties back into what you asked me before as far as buying equipment. Different rules, but...
Are you saying that bonuses are to get company out of the money?
No. That's to encourage people to keep working for you and reward for doing a good job. Absolutely. But...
there is another benefit.
Anyway, moving on. You want people need to feel rewarded. Is when they ask me, what should I spend at the end of the year? Whether it's on bonuses, whether it's on a truck or whatever, it's the same thing as you give me $100 bill and I'm going to give you $35 for it. Think about it.
So I'm only paying.
You can keep your 100, pay the 35 in tax, or spend the 100 and give it to me and I'll give you $35 in tax savings.
Okay.
Depends on what you want.
Okay, so bonuses to employees.
Okay.
All right,
I'll go down that lane.
Forget all the tax. Because that's a question I get a lot. And I mean, that's really not my decision to make because a lot of times I hear, do I need to run this through payroll or should I just give them cash?
You have to run bonuses through payroll. If you're calling it a bonus, it has to go through payroll.
Okay.
You can give your employees gifts. You can give gifts to clients.
But if those gifts...
that's limited, though.
Yes, there is a certain limit until that gift is considered a taxable earnings.
Right. But if I'm giving staff a gift, that's different than me giving them a bonus. But be very, very careful because monetarily, when is that gift really a bonus check?
Right. So I say my payroll compliance hat, run it through payroll.
That's the safest thing to do. It definitely, if they know it's a bonus, then run it through payroll to stay out of trouble.
Absolutely.
Yep.
Now I will say a lot of people pay that bonus completely separately from the regular payroll, but.
Well, they do that so not to jack up the gross and have a lot more taxes because payroll systems, and you know this better than I do. How they see that it thinks that they're getting paid more, so therefore they need more taxes withheld.
It bumps them up into the higher tax bracket.
Yeah.
Same thing with commission payments.
Do 2 checks.
I know you hate bullet points a lot, but I
actually love them.
Okay. I want to summarize this in bullet points. So tell me. I'll pretend to be the complete
Well, I
newbie.
am your CPA, so let's have this discussion because you're on my call list.
You haven't called me, so therefore I have not called you back.
You are on my call list.
Okay.
I am getting to you. Okay. All right. So, ring, ring, ring.
Hello, dear CPA.
I know. I love you too. Oh, it's been so long. How's the kids? Blah, 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 blah. All right. So, it's that time of year again. I don't want you to get in trouble at the end of the year after doing your tax return, and then you get mad at me. So let's see where you are. And you go.
What do I need to do?
All right. I know you use QuickBooks. Mm-hmm. Is your bank account reconciled?
Yes.
Are your credit cards reconciled?
No.
All right. I need you to spend just a little time, get it caught up. How bad is it? 20,000, 5,000, 10,000, 100,000?
I don't know.
All right. Take a look at it, if you will. See if it's close. If it's close, I'm not worried about it. We're estimating right now. All right. If you know it's jacked up, don't mind spending, or let me know and I'll help you fix it.
Okay.
All right. So I want you to send me a backup or invite me as your accountant into your online QuickBooks, and I'll go on and let's see where you are.
Okay.
Who does your payroll?
Payroll Vault, of
They
course.
do mine too.
They're amazing.
I know. Oh, they're so cute.
Blah, 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 blah.
Blah, blah, blah. All right. So, and all that being said, as their CPA, I can only see my client that have authorized me to look at them in my payroll vault.
I'll tell them to authorize you. Moving on.
Thank you. So I'll look on their payroll. So I know how much taxes they have in. I know where they are. And their husband, has your husband changed jobs?
No.
Any major changes in life?
No, not really.
Okay. All right. So I've got a pretty good picture. Give me a little time. I'll run some numbers, run it through my tax software, and I'm going to let you know where you're at and what you're looking at for the end of the year.
Okay, perfect CPA that I pay, but...
Perfect is a long stretch.
Okay. However, if someone doesn't have a CPA or an accountant or a tax person or whatever...
Use QuickBooks. That's a different...
Well, what kind of documents does someone need to pull?
I can tell you this right now. If you bring a box of receipts and deposit slips to a CPA... You might want to go find a bookkeeper to help you put that stuff together because you're going to get charged out the butt.
So that's a great thing that you bring up though. And we were trying to do bullet points and here we are.
You strayed. I didn't stray.
Well, my thing was bookkeeper, accountant, CPA. There's kind of can we just touch on that later?
Yes.
Okay.
Another show.
Okay. So year end.
Yes.
3 bullet points. Go.
All right. Get your accounts reconciled. If you don't have QuickBooks, turn your bank statements in.
Okay.
Get your accountant to put you on QuickBooks.
2.
Or Sage or any of them. 3.
No, number 2.
All right. Give her a little bit of time, or him, to run the numbers, to see what you need to do for the rest of the year, and let them know where you want to be. What is your goals? What is your need to be for the future?
I told you hated bullet points.
I thought that was very
I mean, it was great. Well, and 3.
3. All right. We need to decide what you're going to bonus out or give gifts to your employees. All right. We need to find out whether you need to buy some equipment. What are you going to buy if you don't need the equipment? What are you going to do with your money? And does it really matter?
Oh, shareholder insurance. There's so much stuff for year end.
Don't talk about me. Do not talk about me again.
It's my ADD.
Did you take your medicine?
I didn't.
All right, we got to wrap this up.
Okay.
All right. Everybody, thank you so much for tuning in today.
Thank you, CPA. So I'm going to you're not my mom, you're not my CPA. If you need help with your financials or tax returns or business, get a professional.
There's some great ones here in town. And I'll tell you what, we're all licensed. Every any CPA can help you.
So if your business is growing, I recommend, as a fellow non-accounting business professional, to get help from those people.
Yeah, that's what we do every day.
Cheers to getting prepared for year end.
Cheers to taking care of business. Y'all, thank you so much for listening and being here with us today. I'm Karen.
I'm Katie. Please be sure to subscribe to Cheers to Business podcast on iTunes or anywhere else that you get your podcast. Visit our Facebook and be sure to give us a like. And if you have any questions or topics you'd like us to discuss, shoot us an email from the website cheerstobusiness.com.